Hello, I'm Mike Hetman. Welcome to another edition of CMS Forex News. Today is Thursday, April 10th, 2008. The European Central Bank held rates steady at a 6-year high of 4%, despite concerns that the fallout from the U.S. subprime mortgage crisis will spread to Europe. ECB President Trichet pointed out that inflation remains high, and it's the bank's first priority to maintain price stability. He acknowledges the uncertainty surrounding global financial markets, but noted that the Eurozone economy remains fundamentally sound. The euro-dollar reached a new record high overnight at 1.5911 prior to the release. After breaking the psychological level of 1.59, the pair retracted, falling 150 pips by 2 o'clock Eastern Standard Time. The Bank of England, in its meeting today, cut rates by 25 basis points to 5%, its third rate cut since December. The cut was expected as the high cost of credit is impeding economic growth, and the housing sector is in the worst recession in 16 years. The bank cut rates despite inflation running at a 9-month high. The pound actually gained after its interest rate cut because the rate cut has been anticipated for a few weeks now, and thus has been priced in. Also, the pair was already trading in new record territory above 0.80 for the past 4 sessions. After stalling at resistance near 0.8030, the pair fell 50 pips and was trading near 0.7980 as of 2 o'clock p.m. New York time. The sterling climbed against the dollar overnight, but then proceeded to fall following the Bank of England announcement. The pound-dollar pair fell 125 pips from its session high by 2:15 p.m. New York time. Turning to the U.S., initial jobless claims rebounded from last week's poor figure, falling by 53,000 to 357,000. The number of people continuing to receive claims, however, rose to the highest level in 4 years. Firms may be waiting to feel out the extent of the U.S. economic slowdown before deciding on more layoffs. The U.S. trade deficit widened unexpectedly in February to $62.3 billion. The change was led by an increase in imports of automobiles and machinery. Imports were up 3.1% overall, which was the biggest monthly gain in almost a year. Exports were up 2%. Overnight, the dollar-yen pair fell almost 150 pips to test the 100 level. The yen's gains were short-lived as U.S. stocks rallied today, and the greenback appreciated. The performance of equities, along with an overall improvement in the dollar's fortunes, helped the dollar pair its earlier losses, putting the two currencies near their opening level for the session. The New Zealand dollar-yen pair is sometimes a proxy for carry trade. The Kiwi was able to break its overnight downtrend and jumped 100 pips during New York trading. Carry trade pairs may have performed better today, but it may also have something to do with traders squaring their positions prior to the G7 meeting this weekend. The fundamental docket eases tomorrow as the week comes to a close. Japan releases a measure of inflation faced by businesses. Canada posts its new housing price index, while the U.S. reveals import prices and the University of Michigan Consumer Sentiment Index. And that's it for Forex News for today. Tune in again tomorrow. For CMS Forex, I'm Mike Hetman.